Well, last week, the first foreign exchange transaction using the Reserve Bank of Australia's central bank digital currency, that's a CBDC, took place between the ASX-listed Digital X and fund manager TAF Capital, involving a trade between the eAUD and the USDC stablecoin. Blockchain fintech Canvas was central to this test FX transaction. CEO Daniel Lavecky is here to explain what's going on and the potential for digital currency FX trading. David, thanks for joining us. Now, this was a pretty spectacular moment. Was everyone sort of yelling and cheering like they just put a rocket on the moon? And how close is it to putting a rocket on the moon?
Well, thanks so much, Simon, for having me. I'm Daniel. My brother is David, who's CEO.
Yeah, sorry, I did put the two of you together.
It's interchangeable. We're very excited about this because it's the natural evolution in our minds of finance. So it's the same currency that we're all used to in the form of notes, just a new form factor. What that means is that as we progress into a more digitized world, and e-commerce was the first step in that, we feel that it's appropriate to start upscaling the available systems in place, like notes and currency, into a more digital form factor. So we were very excited to create the technology that demonstrated foreign exchange and international remittances, which both are prone to high expense, slow times, and technological issues. We wanted to demonstrate the transaction using the new CBDC to show that we can reduce costs, speed up transactions, all in a form factor that would be comfortable for everyone to use.
Now, Daniel, I think the RBA today is at a meeting where it's talking to stakeholders about this. Tell us a little bit about that.
So today is our pilot conference. There were originally 140 participants from all around the world that applied to be part of this pilot. It's a very prestigious pilot being run by the RBA and the DFCRC. And they selected 14 use cases. Some of those use cases were run by the ANZ, CBA, and MasterCard. And we're very pleased to be part of a very small group that was selected. Each participant had a certain area that the RBA felt was relevant and interesting to test the usefulness associated with a CBDC. Our experience, having started, built, and sold a large fintech in the area of foreign exchange and payments, we were very interested to see how we could apply those 20 years of experience into the next 20 years of finance of foreign exchange and international remittances. So our area was covering about how two participants on our exchange, to which we have a markets license for the period of this CBDC pilot, could communicate securely and privately over our layer 2 blockchain in order to be able to do instantaneous foreign exchange transactions and instantaneous international transfers. We've all experienced it. When we send money from here to America, it's actually faster to get on a plane with a bag of cash and take it to the participant. We think that there's a lot of things that we can do to improve that process. We think that CBDCs are the basis of that, which is central bank digital currency. And then on top of that are bank deposit coins and stable coins, which are backed by a central bank currency. So we're very excited about the opportunities that over the next few years we'll start to see how these new blockchain-based technologies can lower costs, improve speed, and also provide new services that aren't available today.
And I have to say, if it wasn't for current airfares, it probably would be cheaper to do it with a flight and a bag full of cash as well. Daniel, I do want to ask, in the last year, we've seen what people thought were stable coins not be very stable. How important is it for central banks to be involved in this project as we go down the digital currency sector? And the RBA does seem to be leading in a hasten slowly fashion around this project.
So there's two potential use cases at a wholesale level between institutions and then also on a retail level, like what's being explored in the UK, where it would be financial institutions providing CBDCs to consumers, but in a small amount, in the same way that we have cash in our wallets today of maybe $100, $500, or $1,000. Not really much more than that. So on the wholesale level, types of transactions would be trades doing on the ASX, on the Australian Stock Exchange to buy shares, or alternatively in the derivatives market, or alternatively in the bond market. In those situations, you're always going to need central bank digital currency. But there's cutoff times that limit the ability to trade. So in a digitized world, trading happens 24 hours a day, 7 days a week, 365 days a year. So there certainly is a place for improving efficiency within transactions at a wholesale level, and removing a tremendous amount of operating expenses that drive a lot of the cost basis for financial institutions. What does that mean? It means that we're going to get cheaper financial products, we're going to get high returns on our superannuation, and we're going to have more wealth at the end when we get to our retirement age.
I know your brother, David, the CEO, is currently on a panel talking about CBDC v stablecoins as part of today's discussions and debate. I do want to ask, in your crystal ball, down the track for Canvas Digital, does it end up flowing down from wholesale markets and institutional investors into retail so that, you know, I don't know whether it's going to be my app where I'm buying US shares and maybe shares other places around the world. Am I going to be using digital currency at that level? Because I'm no longer keeping $50 notes under my mattress.
I certainly believe that there is a use case for notes in today's society. And so as a result of that, I believe that there's a significant use case for an electronic form of that currency. Likewise, commercial money, which is like bank money, can evolve into tokenized bank deposits. And what we're seeing in today's conference is how banks like the ANZ have created stable coins that were minted on the back of as based on the central bank digital currency. So we believe that there is a place for both wholesale and retail in the future. And we believe that in a retail sense, there will be certainly an ability for consumers to have in their Apple Pay or Google Pay wallet a form of currency. Now, it might be a mix between CBDCs, being governments, the replacement or the improvement to notes, or alternatively, a stable coin, or also known as a bank deposit token in your Google Pay and Apple Pay wallet.
Daniel, while I've got you, I'm going to throw in one quick curveball before we wrap. How are we tracking here in Australia? I know that Senator Andrew Bragg has been very keen to push forward reform and regulation in the digital currency space. The Australian government, again, is taking its time and has been doing the token mapping and trying to figure out what's going on. Are we keeping up with the rest of the world, or do we have to get our skates on?
No, I think Senator Bragg is doing a brilliant job. We participated in a roundtable with Senator Bragg for exactly that reason, that clarity brings investment, and clarity also brings participants into a market that would otherwise be unavailable to them. As an example, in the wholesale space, superannuations, funds may want to own bonds, and there's a lot of discussions about tokenizing bonds because you can fractionalize them, it becomes a lot more efficient, and as a result, the returns that those bonds make, the coupon payments, go back to our superannuation fund, so we get more money in the end. Now, the challenge is that if those laws aren't there, then they won't participate. So we're very excited. We think that we're keeping pace. There's currently 110 countries exploring CBDC projects, and we think that Australia is right up there. And what we're doing at Canvas is demonstrating that Australian technology is capable of being delivered on a global basis to all participants and all governments around the world straight out of Australia. So Aussie fintechs have got a long lead on a lot of other organisations.